This is Ron Rowland from Money and Markets TV. The telecommunications industry has come a long way since the days of rotary telephones and the AT&T monopoly. Now, the sector is a mishmash of old guard phone companies and speculative technology names. But thanks to exchange-traded funds, you can still get access to a broad range of telecom stocks with just one trade. The first ETF to include telecom companies was Spider S&P Technology, symbol XLK. As the name implies, this fund encompasses technology stocks as well as telecom. That's due to the index methodology at the time the ETF was created in the mid-1990s. Unfortunately, the fact that telecom didn't have its own dedicated sector fund resulted in the industry being ignored by many investors. And that's still largely the case. The combined size of all telecom ETFs is less than $2 billion. That's a shame, because telecom stocks are a great choice for both income investors who love price stability and high yield, and growth investors who want fast-growing businesses. The first group benefits from the fact that U.S. telecom giants like AT&T and Verizon have regained their utility-like characteristics, slow growth, and consistent dividends. But the second group of investors can target different telecom stocks that have huge growth potential. Here in the U.S., the phone market is more or less saturated. Pretty much everyone has a mobile phone. But in emerging markets like China and India, hundreds of millions of people still don't have their own communications device. And the possibilities are even greater in frontier markets where there are remote regions that don't even have phone service yet. So, if you're looking to add some moderate risk telecom exposure to your ETF portfolio, you can focus on a handful of U.S. domestic sector funds, including ones from iShares, Vanguard, Spider, and Focus Morningstar. If you're willing to take on a little more risk, there's the iShares S&P Global Telecommunications and the First Trust NASDAQ CEA Smartphone Index Fund. These offerings hold both U.S. and international telecom stocks. Finally, if you really want to go for fast growth, you can consider these three funds, which omit U.S. companies entirely. The EG Shares Telecommunications GEMS is particularly interesting because it specializes in emerging market stocks. However, I will caution you that some of these ETFs are small and potentially illiquid, so you should always use a limit order when buying or selling. As always, make sure to do your own research. You may find that one or more investments in telecom fit your goals. I'm Ron Rowland from Money and Markets TV. Thank you for watching.